Good morning, it's Monday the 14th of March and welcome to Atlantic Capital Markets Roundup of the coming week's economic highlights. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets. We'll then take a look in more detail at some of the biggest stories straight afterwards. So let's get on with it. So let's take a look at the economic numbers being issued this week. And today it's a quiet day on the numbers front, but Tuesday brings us the latest update on the employment situation here in the UK, and we'll discuss this straight afterwards. We'll also get to hear the thoughts during the last central bank meeting in Australia as they released their minutes from the last meeting. We'll also hear the latest German ZEW sentiment data and PPIs over in the US. Wednesday brings us an update on the inflation situation over in Canada. It's also an important day in the US as we get an update on their retail sales figures and this month's interest rate decision from the Fed, both of which we'll discuss in more detail shortly. We'll also discuss our thoughts on the Bank of England's situation as it's also interest rate decision day here in the UK on Thursday. Thursday also tells us how inflation's doing over in the Eurozone and Japan, plus an update on the US jobless claims. And finally on Friday, it's Japan's turn to announce their rate decision. And the companies that we'll hear updates from this week are as follows. On Monday, it's the turn of Bodycote. Tuesday, we'll hear from Close Brothers, Petrofac and Informa. And on Wednesday, the drinks maker FEVERTREE announced their preliminary results for 2021. And we'll look at these in more detail in a moment. Wednesday is also the turn of Ferrexpo, Inditex and Computer Centre. Thursday and Ocado released their first quarter results of the year, and we'll take a look at Ocado after this during an interesting time for them this year so far. Thursday also brings us results from Cineworld, Harbour Energy, Marshalls and Trayline. And finally on Friday, WETHERSPOONS announced their interim results, and we'll give our thoughts on those towards the end of the video. Well, as of now, Russia and Ukraine continue to talk. However, there are questions over how much progress is being made as Russia continues to indiscriminately shell cities in Ukraine. Will we get more clarity this week, or will there be more sanctions from the West? The US banned Russian oil imports last week. Oil prices fell over 7% last week after jumping 26% the previous week, keeping inflation fears alive and present as both the Bank of England and the Fed announced their interest rate decisions this week. So, with global events continuing to have such an impact on Western economies, let's take a look at some of those stories in more detail. Ahead of the key Bank of England rate decision, we'll first get a glimpse of how well the UK labour market's performing, as the UK releases its latest unemployment data on Tuesday. In the 3 months to December, the UK unemployment rate was 4.1%, its lowest level since June 2020, when pandemic reactions started to take their toll. Vacancies remain high, keeping wage growth elevated as employers push up wages to, of course, attract talent. Even so, UK inflation outweighs the rise in wages, keeping household budgets under pressure. Still, all in all, the UK labour market remains pretty solid, which is what the Bank of England wants to see to continue hiking interest rates. The drinks maker FEVERTREE is due to release full-year results on Wednesday. In the January trading statement, FEVERTREE confirmed growth across all markets across the year. Supermarket sales were above levels last seen before the virus, and then the more lucrative on-trade business recovered in the second half as bars and restaurants ramped up. Supply chain disruptions could still be hurting margins, and rising costs could also impact trading in 2022, so any comments on how the group intends to keep costs under control will of course be closely watched. Profits of £61 million are expected, with a 33% increase in revenue in the US, a key growth market. The share price rose to a 2.5-year high at the start of the year at $28.70 before dropping to almost half of that at $14.70 last week. US retail sales rebounded firmly in January from December's virus-inspired decline of 1.9%, jumping 3.8%, the fastest increase in retail sales in 10 months, and well above forecasts of 2%. The rise in retail sales shows strong demand for goods, and inflation at 7.5%, the highest level in 40 years, did little to curb spending at the start of the year. Inflation is expected to remain elevated, so investors will be watching closely to see if rising prices are starting to dampen demand this month. Expectations are for retail sales to rise 0.5%. A weak reading could unnerve the market, so do keep an eye on the US dollar and, of course, US indices. Wednesday also sees the latest interest rate decision from the Fed. Well, the Fed has been quite clear with its intention to start hiking interest rates in the March Federal Reserve Monetary Policy meeting. Earlier this month, Fed Powell gave a clear signal that rates will be hiked 25 basis points, slightly below the 50 basis points expected before the Russian invasion of Ukraine. US inflation hit a fresh 40-year high in February of 7.9%. Meanwhile, the latest US non-farm payroll showed that the US labour market was recovering well from the pandemic, with 678,000 jobs added in February and unemployment ticking lower to 3.8%. Growth in the final 3 months of 2021 was 7% on an annualised basis. Meanwhile, the inflation outlook is ramping up as energy prices jump around 20% so far this month, suggesting that prices will continue rising. The recent rate hike is priced in. Investors will be keen to see how fast the Fed is looking to hike rates across the year. An aggressive Fed could, of course, boost the US dollar. Ocado is due to update the market on Thursday with its Q1 results, following some recent good news. An international patent court ruled against robot-powered grocery delivery firm AutoStore on all claims in a battle over the IP for the automated warehouse pickers. Recent results from Ocado show that they are in a period of heavy investment as annual revenues jumped 7% to £2.5 billion, but profits dropped to £61 million. Now, while the company says that it can afford to spend, investors are doubtful, which has resulted in the share price more than halving from its all-time high of just under £30 to current levels of £12. Any comments on spending and cash will, of course, be closely monitored. Thursday is also interest rate decision day here in the UK. Well, the Bank of England has raised interest rates in the last 2 consecutive meetings from the pandemic and historic lows of 0.1% to current levels of 0.5%. Heading towards the meeting, inflation sits at a 30-year high of 5.5% in January, and inflationary pressures are building as energy prices jump higher, particularly from the fallout from the Ukraine crisis. Economic growth in January was more robust than forecast at 0.8% month-on-month, up from 0.2% in December, suggesting that latest variant hit was smaller than forecast. However, surging energy prices and inflation could well hurt growth going forwards. Nonetheless, the Bank of England will likely hike rates to 0.75% to tame inflation ahead of the price outlook. The 25 basis point rate hike would bring the cost of borrowing back up to where it was pre-virus 2 years ago, and is unlikely to be the last rate hike in this cycle. A more hawkish Bank of England could, of course, then lift the pound. Finally, on Friday, JD Wetherspoons are due to release half-year results. The pub chain's most recent trading statement for the 16 weeks to January showed that like-for-like sales had decreased 11.7% and total sales by 13.3% compared to the same period the year earlier. Sales were hurt, of course, by the Plan B restrictions, which meant workers were once again working from home, leaving city centres relatively empty. Now, these restrictions ended on the 27th of January, and investors will be keen to see how much sales have picked up since then. Following the previous lockdown, the release of pent-up demand boosted sales. However, there is always the concern that customers will now get used to drinking from home instead of going to the pub, particularly as prices continue to rise. Since April last year, the share price has been steadily falling, hitting an almost 2-year low last week. So those were the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from Segro, NatWest, Anglo American, Hikma Pharmaceuticals, and M&G. In the FTSE 250, we'll hear from Crescent Nicholson Holdings, Dunelm Group, BB Healthcare Trust, HG Capital Trust, and Spirent Communications. So there you have the highlights coming up this week. As always, thanks for watching. Don't forget to click on that subscribe button to make sure you don't miss out on any of our regular videos. Also, as always, a reminder that if you haven't already downloaded our app, why not give it a try to make sure you receive all the latest up-to-date financial news and trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.